The talking here, they're saying it's over. Some of them are saying the bull market for the S&P 500 is over. Others are saying the banking crisis is over. And there are even some talking here that are saying that the bear market is over. And finally, a lot of them are saying rate hike is over and the Fed will start lowering rate. I don't know which camp you are in, but I'm in the markets camp. And that's why we'll take a look at the market internal, the market sentiment, and the price action of the S&P 500, along with the other major market indexes and see what they are telling us. Now, before we take a look at the S&P 500 price action in more detail, let's take a look at the performance of the indexes for the week. And starting off with this weekly chart of the S&P 500, as you can see, the S&P 500 had a range of close to 156 point last week, and it gained a little bit over 55 point or 1.43%. And it is still in this one-time framing down. What that means is it is continued to make lower low, and also it closed below this 10-week moving average and also this 40-week moving average. And it is only 28 point from this December low here. And I will tell you the significance of this later on when we get to that point in the video. And looking at this table here, you can see that the best performer for the week was the NASDAQ 100 and also the NASDAQ Composite. See, the NASDAQ 100 gained almost 690 points or 5.83%. And NASDAQ Composite gained 4.4% or close to 500 point, with the S&P 500 gained 1.43% or 55 point, like I said earlier. Now, the worst performer was the Dow Jones Transportation. It lost 435 points or a little bit over 3%, followed by the Russell 2000. It lost almost 47 points and 2.6%. Then the New York Stock Exchange Composite, 295 points or close to 2%, and the Dow Jones Industrial lost almost 48 points at 0.15%. And looking at the year to date, the NASDAQ and the NASDAQ 100 is still leading the pack, and they both up at double-digit percentage, with the NASDAQ 100 leading the pack with 14% and the NASDAQ Composite 11%. And the S&P 500 is still eking out just a little bit over 2% gain for the year to date, and the transportation still holding on to a gain of 2.85%. But the Russell 2000, the New York Stock Exchange Composite, and the Dow Jones Industrial is in a negative territory. They are losing, with the Russell losing 2%, and the Composite, New York Stock Exchange Composite, and the Dow Jones Industrial almost 4%. If you find the content in this video to be informative and useful, be sure to smash the thumbs up to give it a like and help promote this video on YouTube. And if you are new to this channel and like to continue to watch these videos from me, then subscribe. Looking at the sentiment chart here, you can see that the VIX is actually up at the 25.5 level as of Friday. So it is still inside of this 2030 zone, and that tells us that the market participants are still quite fearful. And also looking at the put-call ratio, although it came down from above one level, but it's still sitting at 0.9 as of Friday's close. It is still above this 0.75, and that tells us that the market participants are still risk off. Looking at the up-down volume ratio for the New York Stock Exchange, we see on Friday it was 6.5 to 1 in favor of the down volume. And looking at the week, we did see 2 days that were positive with the up-down volume ratio favoring in the up volume. The other 3 days it was basically down. And although on Monday it was a little bit, wasn't that quite negative, but all in all, it was still favoring the down volume. Now on the advanced decline, the daily advanced decline, on Tuesday and Thursday, we did see a broad market advance on the market rally on those 2 days. But the 3 other days, when it was pulling back, we did see a broad market decline as well. So anytime that we see 1,500 or greater on the upside, that means almost 80% of the stock is trading on the increase in price, and vice versa. If we see minus 1,500 or lower, more negative, then there are at least 80% or so of the traded stock is declining in price. So on Friday, that's what it means. It got 2,000, a little bit over 2,000 issues that are declining in price. And for the new 52-week low versus 52-week high for the New York Stock Exchange, we see that is also holding up and increasing in a sense. On Friday, it was 231 more stock make new 52-week low than 52-week high. We see only 17 stock made 52-week high on Friday, while 248 stock made new 52-week low. And looking at the AD line, the cumulative advanced decline for the New York Stock Exchange, we notice that it is still moving with a lower low, while the S&P 500 is closing with a higher low. So we are looking at this negative divergence and still waiting for this negative divergence to get resolved. And we are looking for the S&P 500 at least come down to this pivot low. Looking at the Nasdaq market up-down volume ratio on Friday, we see a little bit over 3-to-1 in favor of the down volume. And also notice that there were a couple update on the Tuesday and Thursday's rally. It was supported by a up volume outnumber the down volume. But on the other day, especially on Wednesday, you see this Wednesday here, we have a down volume outnumber the up volume. Basically, we have a negative up-down volume ratio, while the Nasdaq 100 actually closed with a gain. Similarly, for the daily advanced decline, we have nearly 2,000 more declining issue on Wednesday than advancing issue, with the Nasdaq 100 gaining for that day. So that kind of tell you this Wednesday's rally was pretty much concentrated to the FANG stock, and also notice the semiconductor stock was quite strong for the week as well. So those also participated in moving the Nasdaq 100 up on Wednesday, while majority of the stock was trading lower. And also on Monday and Friday, we see that the daily advanced decline was also pretty negative, especially on Friday. And looking at the Nasdaq new high, new low, you can see it also kind of expanding here. On Friday, there was 413 more new 52-week low than 52-week high. Only 41 stock made new 52-week high versus 454 made 52-week low on Friday. And looking at the cumulative AD for the Nasdaq market, you could also see that it is moving with a lower low, while the Nasdaq 100 is still moving essentially doing a higher high. So definitely the Nasdaq market is showing a much more pronounced negative divergence. And in order to correct that, we are expecting the Nasdaq 100 at least come down to this pivot low here. Now let's take a look at the 11th sector in the S&P 500. As you can see, last week the technology was the strongest performer here. It gained almost 7.7 points, or 5.66%. The worst performer was the energy, and it lost almost 5.7 points, or 6.85%. So you can see also the financial was quite weak. It lost almost 6%. So if you want to see this a little bit more detail, just pause the video, because I'm not going to go through the entire table. Instead, we're going to look at each one of these sector, see how the charts show the performance relative to the S&P 500. Now here, looking at the technology, the XLK, we see that the performance actually relative to the S&P 500 is a little bit outperformed. And you see also it kind of held above this 134.92, this level of support here last week. And here on the healthcare, we see healthcare has also got a nice bounce last week, but the relative performance was actually underperformed relative to the S&P 500. And for the consumer discretionary, you can see that it is very underperformed comparing to the relative to the S&P 500. And although it did move up from this 134.99. And here the financial, you see the financial is really underperformed as well. And that's mainly due to the banking sector. And you see that it is, it has broken down from this 32.37 support level here. Now it looks like it might come down and check this 30.14 level. And for the communication is, you could say, is kind of flat, although it did get a bounce off of this 52.35 level. But in terms of relative performance to the S&P 500, it's pretty much flat. And here the industrial is also underperformed relative to the S&P 500, and it is holding on to this 96.8 level. And the consumer is stable. It is relatively a little bit underperformed last week, but overall, if you look at it in a little bit of a medium term, it has been kind of flat. And you can also see the price action is pretty much just kind of chopping around in a range. And right now, it is holding up above this 69.62 level. And for the energy, you could also see the energy is underperformed relative to the S&P 500. It broke this 78.55 level. First it broke this 82.65 level. And now it is under this 78.55 level here. Don't be surprised to see this little gap here get filled So we'd be under somewhere around 73 area. And for the real estate also underperformed the S&P 500. And although it is holding up this above this 35.85, I would be surprised that it will dip below that next week. And here's the material. The material also came down below the 76.66. And also you see this relative strength chart here. You see here it's very underperformed relative to the S&P 500. And here finally the utility XLU, you can see that it did hold up this 61.96. And it is also a little bit of a flat relative performance to the S&P 500 for the last month and a half or so. But near term, you could see a little bit underperformance, but pretty much flat since the beginning of February. Now let's take a look at the US dollar. You see the US dollar pull back last week, and it held this 103.86 level, bounced up to this 105 again, and then now pulling back to this 103.86. So the market appeared to be pricing in the Fed might not increase rate, or it might only do a quarter of a point in the next rate hike announcement, which is a FOMC meeting is coming up this week, and the announcement will be at 2 o'clock Eastern time on Wednesday. So once again, pay attention to the press conference. I think that it has more significant than on the actual rate hike or lack of it. A lot of people think that the Fed won't be hiking, but we'll see. I'm basically looking for it. It could come down to this 102.9 level here, essentially the 103, but ultimately we're going to see it come back up to this 106 and then possibly hit up to this 108 area. And here the 10-year yield, you could also notice a 10-year yield came down to this 3.4 level and it's kind of bounced around here. So we'll see the next week FOMC announcement and see whether it pushes back up or whether it dip down to this 3.1. And here's the 10 and 2 yield inversion chart here. You can see that it was down here at -1, and now it's back up here to this -0.4. And that's primarily due to the 10-year yield came down significantly. Now, looking at oil, remember last week we're looking at the possibility that it might come back up to this 82 area. But we also say if it breaks this trend line here, then we are looking for this thing to come down to this 69 area. And now it came down more than I expected. But right now, if it's unable to get back up above this 72 or get above this zone here, then I'd be looking at oil coming down to this 60 area. And looking at silver, we see silver came up and got above this 21, and now it is above this 22. So right now, we're going to see what do a little bit of a pullback and check this 22 before it pushes up to this 24, or it will just continue to move up into this 24 area. There's a composite point of control up here near this 24 level. Gold also had a tremendous week last week. You can see that it came up above this 1856 and took out the 1920 area, and now it's up at the 1973. Remember, we were talking about coming up, get to this zone here, then get up to the next level, high volume area, and you watch the retail trader will be coming in once it get above this 2000 level, because I think that the talking head all over the media will be talking about this 2000 level, and that will catch the Main Street folks' attention on gold. Now, also doing this VIX future chart here, you can see what the future market is betting on the VIX. And right now, we see that it jumped up to this 28.5 level last week and then pulled back to this 22 level. So it's pretty much been bouncing around here between this 28 and 22. So I wouldn't be surprised to see this volatility continue to chop, and ultimately we're going to look for it to come back up above this 30 level and get to this low volume zone. And by the way, if you're interested to see how I set up this fixed range volume profile in TradingView and how you could use it for free without having a paid subscription on TradingView, go check out this video that I made and see how you could set it up the way that I have it set up. And you can find a link for this video in the description below. Now let's take a look at the indexes price action. Starting with the S&P 500, looking at this weekly chart here, you can see that I have drawn in this parallel line here. And you can see that it is in the range of somewhere between 4160 and 3640. So you could say it is a range of 15% or so. Let me go and measure that for you here. And we do this little measurement. and this is about 12%. So we've been pretty much in a range bound of this 12.5% range for the last year or so, right? Because if you look at it since here, this is back in May, and right now we are in March. So it's been 10 months that we've been pretty much range bound in this area here. Now, the significant, remember I was pointing out the December low here, which is this level here. The significance of this is if the price dip below this low, then the expectation is for the price to retrace all the way back to this lower level here, somewhere around 36.50. If it is able to stay above this, then it could bounce back and trace back up to this 41.60 area and possibly break out of this this upper level. So we are anticipating that there will be a breakout soon, right? Either on the upside or the downside. But looking at the macro and also on the price action, I'm kind of leaning toward the lower on a breakdown below this 36.40 level and take out this October low. Then we probably get a little bit of a major move that will take it down below the pandemic high and we'll get down to somewhere around this 3,200 level. So let's do a little bit of a major move here. And assuming this is a little bit of a bull flag, and we could do it a couple of ways because I'm going to show you how I'm going to do this major move here. And let me use this tool here. So assuming it's a bull flag and we're going to do a major move on this bull flag using these points here, then you can see this 80% of the 0.78 in the Fibonacci retracement is somewhere around 32.56. And if it's 100% major move, then we're talking about down at this 3,005 level. Now, the other thing is, let's say we only want to do a major move of 100%, just on this extension here. Then again, we are looking at a 80% extension move will be 32.35, and then the 100% essentially 1x of this extension that will bring us down to 31.22. So those are some of the levels to keep an eye on if it breaks this 36.50, 36.40 area. Now let's take a look at it on a daily price level here on the S&P 500. You see that the price came down to this area 38.18, this zone here, and got a nice bounce back up, but it did not get up to the upper range of the expected move from last week, although it got close. So right now it's coming back down to this zone here near this 39.16 area or 39.06, so this zone here. So for the coming week, we are looking at this particular range, and the upper range we are expecting for the coming week is 40.45 and 40.37, and the lower range is somewhere between 37.96 and 37.60. So the scenario for the coming week I'll be watching is if it continues to move down, then I'll be looking at this 38.18 level to get taken out, eventually come down to this zone and move into this lower range of the expected move is below this 3800. So that's basically what I'll be looking at and coming down to test these low here. Now for the upside, I'll be looking for this thing to come up, break this trend line, and possibly move up to this zone here. And that will basically take out the upper range of the expected move. Now, these are all predicated based on what FOMC or what the Fed is going to do on the latest rate hike and what is Jay Powell's press conference, how dovish or hawkish he's going to be, and how firm is he going to stand on fighting that inflation battle. And here in the NASDAQ 100, we're expecting the NASDAQ 100 to come up and possibly take out this upper range of the expected move and test this trend line. As you can see, it broke this trend line, this little channel here, and came up to this 12,400 area. And right now, it is up above this 12,600 area here. So for the coming week, we're going to be watching to see what it continue to move higher. And here is the upper range for the expected move for the coming week. It'd be somewhere up at 13,000 and 12,945. And the lower range is between 12,094 and 11,980. So the scenario that I will be watching for the coming week is to see would it be able to get above this zone here and move up to the upper range and get up to the 13,000 level. But for what I'm seeing is possibly a pullback and dip below this 12,420 and move down toward this lower range. Remember, we have that negative divergence here, and it is very pronounced, especially in the NASDAQ 100. So I'm looking for this low. Watch this low here for the coming week to see what it get taken out and this low here is 11,695.41. So watch this level here. So my anticipation or expectation is for it to come back and take out the lower range and come down to this level here. And here, looking at the Russell 2000, remember we were saying if it could not hold this zone here, we're looking for a pullback and possibly work down toward this 1700 area. So that is the watch for the coming week, is to see would it be able to come down here and get a bounce, or would it continue to dip down and move down to the October low here at 1641. And for the Dow Jones Transportation, we're looking forward to see would it be able to hold above this trend line, possibly move it back up to this area of 15,000. And as you can see, it was unable to hold above this trend line, broke down. And we're saying once it breaks below this zone, then we are looking for it to move down into this area here. So for the coming week, we'll continue to watch for price to move down to this 13,450 area and see would it get a bounce back up, or would it break this zone and continue to move down and dip below the 13,000 level and check this low. And for the Dow Jones Industrial, we see the Dow Jones Industrial came down to this 31,700 area, and right now it's trying to hold this level. So for the coming week, we'll see would it be able to hold this level and move back up to this 33,100 area, or would it dip below this 31,727 and move down toward this 30,400 area and essentially come and test this pivot, this little bit of a W, this pivot high here. And for the New York Stock Exchange Composite, we're also seeing it broke down from this 15,000 level, and right now it's trying to hold this 14,600. And I'm looking at it to continue to come down and try to test this 14,300 area, this low here and this pivot area from this W pattern. I will be posting a separate video for the SPY, the QQQ, IWM, and Apple, and also Tesla, along with the ES, the E-mini S&P 500 video in the next day or so. So be sure to keep an eye out for that video. And in summary, we're basically looking at the market participant are still in a risk-off mode, and the VIX is telling us they are also still quite fearful. We saw all the indexes other than the tech-heavy NASDAQ and the large-cap tech-weighted S&P 500 were negative for the week, and only the NASDAQ Composite and the NASDAQ 100 were still positive for the month. The cumulative advanced decline is telling us to expect a pullback to resolve the negative divergence between the S&P 500 and also between the NASDAQ 100. In addition, the number of stocks making new 52-week low are increasing, and that's another sign of the market is getting weaker. So with the FOMC latest rate hike announcement this coming Wednesday, be very careful on the possibility that the majority of the market participant might be caught on the wrong side of the trade, and that can result in a huge swing as they reposition. So be careful and good luck. Thank you for watching.